Hello, welcome again to FairTax Power Radio. I'm Bob Paxton.
And I'm Ron Malero.
And we are the FAIRtax Guys. Still pumped as we can be about the opportunity that FairTax Nation has given us to go to CPAC next month, which is the 21st through the 24th of February. Try to horse collar as many folks as we can, talk to them about the FairTax, do some live streaming over Spreaker of FTPR and some Facebook Live as well. I'm tired just thinking about it.
Oh, it's a great opportunity. I'm so thankful to Marilyn Rickard and FairTax Nation for inviting us. They were looking for a FairTax radio show, and we volunteered, and we got together. So we're going. It's a great opportunity for us, as Bob said, to get the word out and maybe snag a couple of high-level politicians and so forth. You know, one of the things we're going to do, Bob, is we're going to contact the members of the House from Florida, since we're in Florida, our representatives who are co-sponsors, and invite them to come by.
Yeah,
come by our booth and talk to us.
I would hope they would do that.
Yeah, I think that would be great to talk to them.
Well, we've talked to Congressman Yoho a couple of times here on FairTax Power Radio. If he'll be up there, and I imagine he will, we'll grab him again.
So,
and to say we'll be doing our Spreaker Live radio events. We're also going to carry somebody's iPad up there and just pop on Facebook Live as well.
Yeah.
So if you'd like to keep up with exactly what's going on, we'll be posting on our Facebook page. The FairTax Guys Facebook page is as quick as, imagine our broadcast schedule is going to be kind of made up on the fly. You know, we're going to be winging it as we go along.
I think it'll be up to us.
So we can put somebody, like a 30-minute notice. You know, we will be on the air with another FairTax Power Radio Live in so many minutes or at a particular time. Yeah. Check that out, and hopefully that'll work. Let me run this by folks real quick, because we recognize the tremendous opportunity that we've been given. Not everybody gets the chance to go. But if anybody out there listening to FairTax Power Radio has a question in their mind that they would like us to ask of a particular somebody that's liable to be up there, send us an email, thefairtaxguys@gmail.com, or you can leave your question on our Facebook page, and we will do our dead level best to try to grab whoever it is that you want a question answered from and get an answer. Sometimes folks are really good at dodging questions and not giving us answers.
Yeah.
But we're going to try that, and obviously we can't promise that we're going to get an answer to every question that everybody wants to type. But if you want to ask a question of Mike Huckabee or Mike, I'm afraid we probably are not going to be able to get close enough to the president to ask him a question. But we can probably get to Mike Huckabee. We can probably get to, Sean Hannity and folks like that. So if you've got a question that we'd like us to pose on your behalf up there, please get a hold of us, thefairtaxguys@gmail.com, or on our Facebook page as well, and we'd be happy to try to follow through on that for you.
Yep, because our listeners come through with some great questions and comments. I mean, sometimes we even get a interview out of it. Other times we get great comments. I had a comment.
I'm just thinking, how many questions and how big is Jade's email to this going to be? Oh, we pick on him because we like him. He's a good old guy. Go ahead. I didn't mean to derail your train of thought.
Yeah, it's gone. Senior moment. Anyways, speaking of which, we're wondering how are people going to respond, because Congress just passed and the president signed this tax package, which is not tax reform. It's tax relief. Yes, it is tax relief, and I believe it will help the economy. Whenever you lower taxes on corporations and individuals, you put more money in their pockets, and businesses can expand, and people have more money to spend. The economy grows. It's just that simple. It's happened every single time with both Democrat and Republican presidents. But how long will it last? Well, we have there's several things that are still problematic with this current tax code, and one of them is lack of stability, constant congressional tinkering into the tax code.
Yeah, now you would think that if they just got their big tax reform thing that's supposed to be the end-all, be-all for tax reform, that would be it. They would not be offering any more amendments to try to change the revenue code. How's that working out?
Not quite, is it? We've talked about this before. We usually do a scorecard update on every episode.
Let's back up a little bit and look at our scorecard that we hit on a couple of weeks ago.
Yeah.
On the timeline, that as of December the 14th, the date that the House passed their H.R. 1 tax reform plan, if you went to congress.gov and you scanned on the string Internal Revenue Code, you see how many hits come back, how many proposals.
Put it in quotes.
Yeah, put that in quotes to see how many proposals come back that have that string in them. And as of December the 14th, when the House passed their H.R. 1 plan, it was 1,110.
Yeah, now, just think, that's 11 months into the new Congress, over 1,100 proposals to change the tax code.
Which is over 100 a month. Isn't that cool?
Yeah.
But and that 6 days later, when the House and Senate got together and agreed, they had hashed out their differences between the House plan and the Senate plan, and both the House and Senate agreed on the same plan. That was 6 days later on December the 20th. In those 6 days, 10 more proposals, more than one per day.
Amazing.
1,120 as of December 20th. On the 23rd, just 3 days later, excuse me, on the day that the president signed the tax plan, there had been 6 more changes, 1,126. As of a couple of weeks ago, when we recorded our last batch of FairTax Payroll Radio episodes, January the 4th, 1,129. And as we are recording this on January the 10th, the total is up to, that's your cue,
1,133. That's a little over a year into the 115th Congress, and they have over 1,100 proposals to change the tax code. And the point that Bob made, they continued to make proposals to change the tax code even while the House and Senate leaders were wrangling with this tax plan. You'd think, that would be the end of it. No. So there's no stability. Now, not all of these will become law, will they?
They won't.
No, but
and if I'm not mistaken, some of those hits are going to be resolutions, not really bills and amendments to things like that. But that shows you how badly the Congress critters are addicted to the income tax.
Yeah.
Because they just can't quit messing with it, because what they're actually addicted to is the campaign cash that the lobbyists hand out.
You got it.
And I can guarantee you that of these 1,133 proposals to change the income tax code, probably 1,130 of them have a lobbyist behind it.
Yeah. That is the way it seems to work up in Washington. All right, the lobbyists go in. The lobbyists are already gearing up. We mentioned in one of the previous programs last week or the week before that one of the carve-outs in this tax plan was to brewers, craft brewers of beer. All right, small breweries, and they got a carve-out of some kind of that amounted to like $4.2 billion, but it only lasted for 2 years. So they were already gearing up with their lobbyists to make that carve out permanent. All right, that's the type of thing that goes on. So the lobbyists go in there. Yeah, we'll do what we can, but and by the way, you'll find some nice addition to your campaign cash.
Yeah, something in your Christmas stocking for whatever.
Yeah.
So that's just the way it goes. But I have never understood why we, the people, even stand for an income tax. We have mentioned this before on FairTax Power Radio. The Founding Fathers, in their infinite wisdom, said, no way are we going to allow an income tax in this new republic of ours. We have seen what income taxes do to other places, and we're not going to have it here. And it was actually ruled that the federal government tried to put it in as a way to fund the Civil War shortly thereafter. In the late 1800s, the Supreme Court ruled an income tax is unconstitutional. You can't do that. Founding Fathers said no. But so what did they do? 16th Amendment. There was an amendment to the and of course the way they sold it. Oh, this is you can go ahead and give us this authority because it's only going to be a little bit that we're going to assess against the very highest. It's not going to touch you.
Yeah.
So go ahead and let us do this. And that's why the 16th Amendment got snuck through in 1913, and why it's going to take repeal of the 16th Amendment to make sure that once the fair tax passes, we never have an income tax again. But think about from 1913 to like 1943, 30 years.
30 years.
How much change? I mean, that's just a generation. A lot of people live that long, so that's not even a lifetime here. And it went from just a small little sliver that's going to hit just the highest income earners to smacking everybody in the wallet. And that's when withholding came in to finance World War II.
Yeah.
So the government at that point decided that it was a higher spending priority than your family, and we're going to get our money before you get yours. Yeah. And it's been that way ever since that way. And that is one of the things what I love about the fair tax. It fixes that. The fair tax puts your family back as a higher priority than feeding the government. But right now, we did not get tax reform because that insidious provision is still in the tax code.
And that payroll tax is the most regressive tax. Some people are always worried about, you hear the knee-jerk reaction. Oh, it's a sales tax. It's regressive. Well, the fair tax is not. And we've gone over that 100 times before. But if they're worried about the regressive nature of a tax, why aren't they complaining about the payroll tax? That is the most regressive. It's the same rate on people whether they earn $20,000 a year or $120,000 a year. I mean, it really hurts the poor more than anybody else. It's a terrible tax for them. But where's the big fervor for that?
And it's not a stable funding source for Social Security and Medicare because it is limited. The only people that are supporting Social Security and Medicare through this payroll tax are people that are working for a paycheck, that are getting a W-2 at the end of the year. If you're making your money off investment, you're not contributing.
That's right.
You're not. So and those are the folks that are usually making more money. So why don't we make those folks contribute to Social Security and Medicare? The fair tax makes them do it. The current income tax system lets them get away.
Yeah,
that's insane.
Right. So, speaking of addiction, we have some evidence that there are people that are just absolutely addicted to this tax code. This is published by the Tax Foundation. State strategies to preserve SALT deductions for high income taxpayers. Now, what do we mean by SALT?
That's the opposite of pepper. No, that actually stands for state and local taxes.
Yeah. This is not a food show.
Oh, I wish it was. I'm getting hungry.
But yeah, so they kept. Well, all right, let's just read this thing and see what it says here. Bob and I are going to chip away at this thing. Several states are exploring strategies to preserve the full state and local deductions for high-income residents, which is capped at $10,000 under the new law. Now, when I lived in New York, that cap wasn't an issue for me, obviously, but you could deduct your state income taxes, and if there were local income taxes, from your federal taxes, okay?
You could deduct it from your taxable income. It reduces your taxable income. This is not a credit against your actual tax. But you could pay your state and local taxes with money that is not subject to federal taxation. Yeah. So you could reduce your taxable income by the amount of money that you pay state and local tax. Same way like for taking a charitable contribution does the same thing. You can money that you give to charity does not count as taxable income. So you can reduce the amount of taxable income on which you have to pay taxes by taking charitable deductions. And in this cases, we're doing the state and local taxes. And if you're in a high tax state like California and New York, that could be pretty significant if you're on the upper end of the income scale.
Sure, yeah. If you're making big bucks each year.
Yeah, I mean, if you were a truck driver and you had a couple of trucks leased and you were just rolling in the...
Yeah, right.
Yeah, Ron, I'm just kidding you.
Because in California, their income tax is 13.3. Can you imagine that? Paying 13.3 state income tax on top of your federal income tax? No wonder they're howling. And in New York, it's 8.82 by the last information that I have. So those states are squealing because there's a cap now.
Yeah, they're addicted to their state income tax. They want to continue to sock people, especially on the higher end of the income scale, with a fairly significant income tax. And now, California, this is funny. I mean, this makes me laugh what California is trying to do. They have got legislation has been filed out there. What they're going to allow residents to do is to make what they're calling a charitable contribution to some California Excellence Fund. I forget the name of it exactly, but they are going to let you make charitable contributions to the state. And for every dollar that you donate to this charitable organization, you will get a tax credit against the taxes you owe.
So apparently
they are trying to turn taxes into charitable contributions.
They're trying to turn California into a charity. Are they a registered charity?
I don't know. They're a basket case. Their finances are. I tell you what, the way it is. But
we got some FairTax friends in California, so we don't want to.
That's true, but their economy is
beautiful state. But their
economy is not a model under which you would want to run yours. But is it amazing that they want, because what they've done here, as we mentioned earlier, that the deduction, you cannot deduct more than $10,000. If you paid more than $10,000 in state and local taxes before, you can only deduct $10,000 under the new state law. So, but the charitable contributions are not capped. If you if you've got let's just make up some figures. If you've got a $50,000, tax liabilities to the state of California, and you can only deduct $10,000 of it under the new law, what they're trying to get you to do is to donate the other $40,000. To this charitable contribution, and you can take that as a charitable contribution. You can take the $10,000 as a tax contribution, and still maintain the entire get to deduct all that you're actually paying in taxes. Although on paper you're paying $40,000 in charitable contribution to the state of California and $10,000 in actual taxes.
So apparently now, California is going to become a registered charity.
Could you come up with a crazier idea?
Well,
only a politician could think that taxes could be a charitable donation to the state.
And that's because they're addicted to the income tax, both state and federal. Let's break the addiction. We have to help these people. We have to have an intervention, and help them break their addiction, Bob.
Yes, I do. What kind of withdrawal symptoms they'll go through when they... Probably none, because once we the people get the fair tax, if we get rid of this monstrosity called the income tax, and we can fund the government with a fair tax like we've been advocating for years now, not only is that going to be rocket fuel for the economy for sure, but I'd imagine people are going to be tired of filling out income tax returns. They're going to be tired of sending their money to the IRS. If you're self-employed, you've got to estimate your taxes and send it in every quarter, if I'm not mistaken. You've still got the IRS. You've still got the withholding if you're working for a paycheck, which means, as we mentioned earlier, you're still feeding the government before you're feeding your family. That is philosophical wrong in anybody's book. Regardless of what your political ideology may be, you should not have to feed the government before you feed the family. And that is if I could pick just one reason that I want to replace the income tax with a fair tax, that's it.
That's right. And everybody has a hot button when it comes to the income tax. Another one is the evasion. We haven't talked about evasion this time, but we have talked about it in the past. Evasion of the income tax is a huge problem. There are people evading, and I'm not talking about legally avoiding taxes or using the law to reduce your tax burden, like taking the standard deduction. That's 100% legal. You're foolish if you don't take the standard deduction to reduce your tax burden. We're talking about people who are evading by either not reporting some of their income or all of their income, or they're over-reporting deductions and exemptions. And that happens a lot, to the tune of $693 billion last year in 2017. Or in another way of looking at it, over per household, the cost, the extra cost per household, because the rest of us have to make it up, $5,365 per household. And here's a third way of looking at it. I was told by our friend Randy Fisher that the evasion rate is about 21%. That's like 1 out of 5 people. 1 out of 5 people are not paying their income taxes. And do you think this new tax plan is going to change that?
No.
Nah.
I mean, once you have made the decision that you're going to evade taxes, and you're evading these state and local taxes in these high tax states as well. Once you figure out you've got a way to make income without reporting it, either to the state or to the feds or both, just the fact that they lower the rates a little bit is not going to change people's mind. A zero rate is still better than, cutting it from 35 to 32. So.
Yeah, and I just happen to have the tax brackets, for the new and the old. Well, the 10% tax bracket stayed the same. It's still 10%, up to $9,525. Okay, what was the 15% tax bracket is dropped to 12. Okay. Now, we're talking about people who are evading the tax code by not reporting all of their income. They might have a job on the side, and they're working under the table, and they're not reporting it. So somebody that's in the 15 or now 12%, all right, they dropped 3%. Is that going to be incentive to them to start reporting that second job?
I don't think so.
No. And the next tax bracket, which goes from $38,700 up to $82,500, that dropped from 25 to 22, another whopping 3%.
Mm-hmm.
the point is that changing the levels of these tax brackets is not going to suddenly cause people to start being honest about their evading the tax code. They're going to continue evading it, and the rest of us are going to continue paying for it. So that is a huge problem with this tax code that is not addressed by this new tax plan, not at all, along with the lack of stability that Bob and I already talked about.
And I'll tell you what, well, I assume we mentioned that California is going to try to turn paying taxes into a charitable contribution.
Now, you asked her what could be a crazy...
I'm going to ask them, well, you're from New York.
Yeah.
So I will let you explain to everybody what New York's tack on this is.
I moved to Florida for a reason, so I'm not sure I can explain. I can read it, okay. New York Governor Andrew Cuomo is considering creating a new employer-side payroll tax with a commensurate credit against state income tax liability, since employer-side payroll taxes are deductible. So
it's kind of the same thing. California is saying we will let you make a charitable contribution instead of taxes.
Yeah.
New York has said, I'm going to snag it out of your paycheck. We're not even going to let you get your hands on it. I'm going to snag it out of your paycheck.
So they're turning inside out, trying to get around the new law that caps the state and local tax deductions at $10,000. The problem is they're losing people. All right, we moved to Florida 22 years ago. There are people who are leaving these high tax states and moving to places like Florida, Texas, and Tennessee that don't have an income tax, only have a sales tax. And some of these states are losing people every day, and they're getting tired of that. They're losing taxpayers, so they're trying to turn that around in any way they can, and that's one of the ways. Unfortunately, some of the things, some of these ploys may not stand up to constitutional muster.
I don't think that's going to work because it notes that case law and IRS regulations both, they generally require a charitable intent in order for a contribution to be deductible, meaning that the individual does not receive a substantial benefit from the contribution, like when you give to your church or when you give to the Red Cross or when you give to any other of these charities like that. You're not really expecting anything in return. You're just donating your money. You're not getting anything back. But if you are making a charitable donation to the state of California, and in return for that charitable donation, your state taxes are reduced, that is a tangible benefit to the person, and that really, under the law, should not and does not qualify as a charitable deduction. So that tells you how desperate California is to try something that they know is not going to work.
Oh, yeah, but they're counting on it's going to take years of litigation and so forth, and tax courts and wherever else they can go, maybe on up to the Supreme Court, and try to get this through. So the whole point of this is that all this wrangling is 100% unnecessary. Right? We just don't need to be doing this. Why are we beating our heads against the wall continually with this income tax code when there is a much better, more simple, and more sane system that doesn't involve all this wrangling, and that, of course, is the fair tax.
Yeah, I'm wondering if these high-tax states like California and New York have got a problem with the way the income taxes think, why aren't they at the forefront of the effort to get rid of the entire income tax system?
Because they are addicted to the income tax.
Oh, mercy.
Yeah.
That makes no sense. It really doesn't.
So... And that's, I don't know, that's about the only way I can think about it. They are addicted to the income tax. They can't think outside of that tiny little box. Even though some of the states, that we have already mentioned are doing just fine without an income tax, some of the others can't seem to punch their way out of it. So we're going to help them break this addiction.
Oh, yes. Well, I'll tell you what, if we could ever get rid of the income tax, replace it with the fair tax, that people would get addicted to that really quick.
Oh, yeah.
Love not having to file an income tax returns. Love not having anything, no payroll taxes, no withholding taking out of your paycheck. Love feeding your family before you feed your government. Love getting a prebate check every month, which is a tax refund, because the fair tax, again, does not tax you on spending above the poverty level for your household size. But rather than try to keep track of, how much everybody's paid, you pay the tax from $1 that you spent, and you get back in this prebate or refund on the tax you don't owe, because they know how much fair tax you will pay on that level of spending, and you get that back. And for a family of 4, it's just a bit north of $600. This isn't chump change.
Yeah. And any day now we're going to get the new figures from Health and Human Services, the poverty level, and we'll be able to generate that prebate schedule for everybody. But in 2017, for a family of 4, it was $623. That's the prebate you get. That reimburses you for the fair tax you'll be spending on the basic necessities of life. And, it's and it's going to be a little bit more in 2018 because, inflation and so forth. So that's going to help you. The fact that corporations are not taxed under the fair tax, so the cost of doing business comes down. The big thing for the small corporations is the compliance cost. The fair tax drops the compliance cost way, way down, so they can reduce the cost on their products and services. Now, for those of you that think, they're not going to reduce their price, they're just going to keep it. That's pretty naive.
The competitive pressures in the free marketplace is not going to let that happen.
No, absolutely not. It doesn't happen now, and it doesn't happen, and it's not going to happen under the fair tax.
I tell you what, we've had fun with this episode, showing just how crazy some of these proposals are being responded to in this way, that states are actually thinking that they can turn their taxes into charitable contributions. States are actually thinking that we'll just up our payroll tax and give you a credit against that. The whole idea is they're trying to game this income tax system.
Yeah.
And people trying to game the income tax system is why it's over 70,000 pages long and nobody can understand it.
And in comparison, how do you game a sales tax?
You don't.
No. I mean, try not to pay the sales tax when you go into one of these big stores. It's just not going to work. And remember, 90% of the purchases in this country are made at the top 500 largest stores. And they're not going to mess around with trying to play fast and loose with the sales tax. They're just not going to do that.
Yeah, and remember that used goods are not taxable. If you sell something to your neighbor, if you sell your used car to your neighbor, there's no fair tax liability in that at all.
So again, for the people at the bottom of the income scale, they get a prebate, which would be a big help to them. And if they need to buy a car, they don't have to buy a new one. They can buy a used one and legally not pay any fair tax on it. Indeed. So for those folks, it's a huge benefit.
Absolutely. I tell you what, we're about out of time for this edition of FairTax Power Radio. Let's remind everybody again of the tremendous opportunity that we, the FairTax guys, have got to go to CPAC. Encourage you again that if you would like us to pose a question to someone that's liable to be there on your behalf, send it to the FairTaxGuys@gmail.com or put it on our Facebook page. Look out for our Facebook Live events we'll be doing from CPAC, and also we'll be live on Spreaker as well as soon as we can figure out how that works.
Yeah, and don't forget Ebates, all right? It's a new way to support the Americans for fair taxation. If you shop online, join Ebates. It's free. And
that's Ebates, EBATES. It's just like rebate without the R on it.
Yeah, and you've probably seen their ads on TV. But and there is a way to send your rebates to the AFFT if you want to support that organization. We encourage you to do that. So that's another way of supporting. And let's see, who else we can... Again, thanks to FairTax Nation and Marilyn Rickard for inviting us to CPAC next month. Really looking forward to it.
Absolutely. I'm not looking forward to driving in that nasty weather, but I'll tell you what.
It's not going to be nasty. It's going to be wonderful.
I hope so, because you're going to drive, not me.
That's right. And we're used to it. We're from New York.
Yeah, well, I tell you what. On that happy note, let's wrap this show up. Thank you so much for listening. I'm Bob Paxton.
And I'm Ron Molero.
We are the FairTax Guys, again reminding you that the fair tax is America's big solution to big problems, and once you understand it,
you'll demand it.
Fair tax is coming, don't stand in the way. Fair tax is coming across the U.S.